I'm Ron DeLegge with ETF Guide, and I've got some charts I want to share with you, so let's get to it. Let's start with a big picture view of the major asset classes. This is a performance chart since the beginning of 2024, and as you can see, that red line indicates the performance of the leader. That's been Bitcoin. It's ahead by 37% and change, and it's been all over the place. It was down as much as 20% in late January. It peaked there about in March, and it's bounced all over the place, but those that have stuck with it have done pretty well, and it's outperformed about actually more than double the next performance leader, which is SPY, which tracks the S&P 500, ahead by a delicious 16.23%. I'm going to tell you in a second which some of those industry sectors that are driving the S&P 500's performance this year. And then some of those laggards like bonds as well as global real estate have now pushed into positive territory. That's a good sign. And then commodities, ticker symbol SDCI, have been good performers all year long. They're ahead by about 9%, and they're holding on to their gains. Now, if we slice up the stock market by large, mid, and small companies, you'll notice an interesting trend here. For most of the year, the leaders have been those large companies, mega caps, the Fab Five, as they're sometimes referred to. And then you've got behind that the mid caps as well as small caps, which have lagged. But more recently, we've seen a pop, especially in the small company stocks, which is a definite positive sign. You want to see broad participation in any type of healthy stock market move and rally. And that means participation by all types of stocks, not just mega caps and large caps. You want to see participation in that move by those smaller and mid cap stocks, and that's what we are starting to see right now. And it's been a nice move for some of you trading some of these leveraged ETFs. TNA, which aims for 3x or 300% daily upside leverage to small company stocks. That's been a great performer here over the past month or so. It has delivered some strong results. Of course, the bear version of that, TZA, which aims for 300% inverse exposure, has done just the opposite. So the bulls have started to come to life here in those small company stocks. And those of you that have been trading this have certainly noticed that. Now, one of the other things happening in the ETF marketplace is the impending, upcoming launch of a spot Ethereum ETFs. Now, earlier in the year, we saw spot Bitcoin ETFs launch here in the US. Well, now we're going to see spot Ethereum ETFs launch. And I asked you on our community tab, how excited are you about this? And 63% of you aren't too excited. 35% of you said, yeah, I'm excited. Bring it on. And whether we are excited or not, they're coming. They're coming. And so these are some of the ticker symbols of ETFs that are going to be hitting the marketplace. We've got companies from Franklin Templeton to Fidelity to Bitwise, Grayscale, Invesco. This is going to be just like the Bitcoin launch, spot Bitcoin launch, where you had multiple funds all launching on the same day, and they're all just going to make a grab bag fight for those assets. So that's what's going on there. Keep some of these ticker symbols on your radar. If you're looking at Ethereum, these are the ones to be watching, and to get exposure to, of course, spot Ethereum. That's coming soon. And one thing I will say about Ethereum too, Ethereum versus Bitcoin, and we'll look at a chart here as far as performance this year. It's been about even with Bitcoin and Ethereum itself, up around 52 to 58% approximately, bouncing around in that range. You'll notice that spot Bitcoin ETFs, after they were launched, Bitcoin itself started to go down in price. But as you can see, that red dotted line, since the launch, Bitcoin has gone up. And the asset flows into these spot Bitcoin ETFs has been tremendous. I expect that to be the same for the spot Ethereum ETFs. You're going to see some tremendous asset flows into these funds. As investors look to diversify their portfolios, institutions get in on it, and ETFs are really breaking open these new asset classes and helping investors diversify their portfolios. One thing I will say about Ethereum versus Bitcoin, it has a lot more utility versus Bitcoin, and it is being used in all kinds of applications, blockchain technologies, and so forth, and a lot of things being built around the Ethereum network. So that certainly, I think, seems to be bode well for the future of Ethereum. Now, in terms of industry sectors within the S&P 500, we ask, well, what's been driving that performance? Well, you can see here, let me just bring this down a little bit so we can get a little bit of a perspective on what's going on here. So we've got S&P 500 industry groups, there's 11, and we've got 0 that are down or negative, which is extremely bullish. This is a sign of broad participation on the upside. Some of those lagging sectors, like even real estate, has decided to turn positive. And of course, the leaders, XLC, XLK, this is pretty much kind of a replica of last year where these two same industry sectors were leading the overall market. And then financials are also up. You know, if you look at this, you've got 1, 2, 3, 4, 5, 6, 7 industry sectors in double digits, better than 10% returns. And that, again, is strong across the board performance for industry sectors within the S&P 500. Now, in terms of individual stocks, everyone's been talking about for most of this year, NVIDIA. Single stock ETFs don't get as much attention as I think they should. And some of those single stock ETFs, and this is one of them that merits attention, is NVDU, which aims for leverage performance to NVIDIA itself, the stock. And so NVDU is from Direction, and this particular ETF has been a lights out performer, ahead by over 200 and what is that? I can't even see that. Is that 250%? Oh, actually 260%. So it's been lights out performance for some of these single stock ETFs. NVDU, of course, a top performer. Now, for those of you that may be skeptical about the move or maybe even temporarily bearish, you also have the opposite trade, which is 100% daily opposite or inverse to NVIDIA's stock price. That's NVDD is the ticker symbol. David, NVDD is the ticker symbol. And lots of use cases for these types of ETFs, whether it's trading, you have a short-term view. Those of you that may have a position in a stock that you want to protect, I think for those inverse ETFs that they offer an interesting way to protect or offset any potential losses. So that's one case or use case for these types of ETFs. But you're going to continue to see lots of asset flows, I think, into these types of funds as people learn about them. Now, I asked you on our community tab another question. This was a poll. How many ETFs do you own inside your combined retirement and taxable investing accounts? And 73% of you said less than 10. That was the majority. And then right behind, between 22% of you said between 10 to 24 ETFs. So that was pretty much the bulk of the poll. And just for the record, there is no correct number of ETFs. There's no magic number of ETFs to own in an investment portfolio. A lot depends on the size of the portfolio. It also, I think, depends on what exactly you're doing. I think those of you that are more tactical in nature, you maybe are more active with your investments in trading, are likely to have more holdings, more ETFs inside your portfolio that you're maybe getting in and out of. And for that reason, just by strategy, you may own more funds versus someone that maybe takes a more conventional approach, less active, that just wants to buy and hold and continue to add to their investments over time. And the other thing I would say about this, while there is no perfect number of ETFs to own inside a portfolio, One thing I will say is you can own too many ETFs, and that's something you definitely want to avoid. And that's can lead to a problem known as over diversification, especially when you own a lot of the same type of stuff. So if you own a lot of, let's say, QQQ, and you also own XLK, and you also own other technology or semiconductor sector funds, now you're beginning to own a lot of the same type of stocks and equity exposure. And it's really not benefiting you. It's just creating more holdings, more clutter, more over diversification. And so, from that perspective, it can really begin to hurt you and create a lot of needless replication. Now, in terms of interest rates, we got the Federal Reserve with a upcoming FOMC meeting in about a week or so. And according to the CME Group, just over 95% of their market participants expect interest rates to remain unchanged at this next meeting. So that is the consensus view, that there's not going to be any changes. Now, I cross-referenced this to Polymarket, which is a prediction marketplace. People place bets on what they think is going to happen. It's actually an interesting marketplace. It's not just business bets, but all kinds of stuff, sports as well as politics and just different things. It's a very interesting real-time view of what people in a certain marketplace think is going to happen. And I'm not encouraging anyone to place bets, but I refer to this, and I'm going to start referring to this just as a real-time temperature of what people think and what market participants think. So this is a question that they have posed. It's actually one of the bets on Polymarket. How many Fed rate cuts are going to happen this year? And you can see the vast majority think we're going to have rate cuts of 0.5% to 0.75% by the end of the year. So will this turn out to be right? We'll see. There's almost $500,000 of bets that have been placed in total on this. And so, again, just one real-time temperature view of what certain market participants think is going to happen in terms of interest rates. In terms of the big money, I always like to see what the big money's up to and what they're doing and how they made their wealth, because I think it's a great lesson for all of us. You can see the top 10 billionaires globally, and you'll notice the industry sectors where they made most of their wealth. And there's a high concentration on one industry sector, and that's technology. You got 8 out of the top 10 made their fortunes in the technology sector, and I think that's a great lesson for all of us to orientate our investment portfolios more towards technology, because that's where the big money is, how the big money is orientated, and that's how they made their wealth. And I think that's just the way of business. Everything is becoming being dominated by whether it's cybersecurity, whether it's AI, whether it's cloud computing. This is all part of that technology movement, semiconductor, EVs. It's all technology. And so that's the place that I think the stocks, the ETFs that are focused on this area, that's, I think, what you want to be emphasizing in your investment portfolio. Then finally, just want to note that we do have some wonderful resources for some of our viewers, well, all of our viewers actually. In the description section below, we just released a book called 60 Smart Ways to Retire Better. We got fresh 2024 updates. It covers everything from distribution pitfalls to estate planning, navigating markets, Social Security, and of course, my least favorite subject, taxes, and how to eliminate them and actually make your life less tax heavy and also tax free, and using things like Roth IRA, Roth 401k, and maybe even some Roth IRA conversions. So how did you enjoy today's episode? What's on your mind? By the way, we talked earlier about small cap stocks. We do have a ETF battle that we did of small cap and mid cap ETFs last week, so be sure to check that out. We've got new episodes of ETF battles coming up this week, as well as First Look ETF will be releasing a new episode on that very soon, as well as shifting energy. So lots of great content that we're bringing to you here at ETF Guide TV. And also be sure to check us out. Those of you that have Apple TV, as well as Amazon Fire and Roku, we also publish our content there, so don't miss it. I'm Ron DeLegge with ETF Guide. Thanks for watching. We'll see you on the next episode.